Okay. Now.
And
That's it.
what else?
About these two cases, what we do in these two cases.
So in case one, we'll have to prepare the revaluation account and the partner's capital account and everything. But in the case two, we'll have to prepare revaluation account and memorandum revaluation account, in which all the entries will be done in the opposite way from the revaluation account. And
Okay. Okay. So in first case, we pass the journal entry and we prepare revaluation account, and we also show our assets and liabilities at new value. And in second case, we don't have to show our assets and liabilities at new value. That's why we show our assets and liabilities at their old value. Okay.
yes, sir.
And we prepare memorandum revaluation. Okay. Now, accounting treatment of reserves, accumulated profit and loss. Okay. We have discussed this concept in our previous chapter also, like change in profit sharing ratio. Do you remember the concept?
They're not that clearly.
Okay. So there is two cases in this also. You can see I have written case one, when reserves of profit loss account is to be closed. And there is a second case when we don't have to do anything with these accounts. We just adjust our capital account for distribution, for giving effect of distribution. Okay.
Okay, sir.
You understand the case? What is the difference between these two cases? Let me explain it to you. Okay. This is reserve account. Okay.
Yes, sir.
Now, in this account, what we do, we the reserve account or accumulated profit account always have credit balance. Yes.
Yes, sir.
Let's say 10,000. And now, if you want to close this account, what we have to do? Close means there will be no balance in this. Okay, whenever we want to close any account, we just transfer the balance from that account to some else other account. Okay.
Okay, sir.
Okay. So in this account, reserve account, we have credit balance of 10,000 by balance PD, which is written. Now we want to close this account. So what we will do?
So we'll write the balance amount in debit side of balance carried down.
We will write the balance on the debit side as to balance CD.
Yes, sir.
So it is balance, means the account is still open. Now in next year, you have to write this again here. Yes or no?
Yes, sir.
So this is not closed. For closing account, you have to transfer the balance to some other account, not in this account. Okay. You cannot show the balance at the last. It means account is still open.
Okay, sir.
So we have to write anything else for distribution purpose. So reserve is distributed between
The old partners.
the old partners, because these are past profit. So in old partners in old ratio. Generally, we do this. So we will write here to partners capital. If name is given, then to A capital, to B capital, whatever the name is, you will write the name of partners. To partner capital account, 10,000. Now this account is closed. There is no balance left.
Okay, sir.
Okay. Now, if question asks us to do not close this account, then we don't have to write partners capital on the debit side. We'll not write this because we don't have to close the account. It will be written as balance to balance CD, 10,000. And in future, this balance will be carry forwarded. And if at the end of the firm or when we are shutting down our business, then it will be distributed in new ratio. Yes.
Yes, sir.
So there is two cases. First, when we have to close the account, and the second, when we don't have to close the accounts of reserve. Okay. In your books, there is only one case, but for understanding purpose, it is better to understand both the concept. Okay. The first one is given in your book, in your syllabus, that we have to close that. Okay. So for closing the account, you can see you have to pass a journal entry. Okay, if we are writing two partners capital on the debit side, then what will be the journal entry for this?
So could you repeat?
If we are writing two partners capital account on the debit side of reserve account, then what will be the journal entry?
The reserve account debit to partners capital account.
Yes, so reserve account debit to partners capital account. So I have written here, you can see, for distribution of reserve and accumulated profit, all the reserves name are on the debit side and partners capital on the credit side. Yes.
Yes, sir.
Okay. And if we have to distribute the loss, the entry will be reversed. You can see the partners capital on the debit side and to profit and loss to fictitious assets.
Yes, sir.
So you can see here the solution. In this case, all the profit or loss will be distributed between partners in their old profit sharing ratio, and a journal entry will be passed separately for profit and loss. So we have to pass two journal entry, one for profit if it is given in the quotient and one for loss, if any. Yes.
Yes, sir.
Okay. So is this clear to you?
Yes, sir.
Do you have any doubt?
No, sir.
Okay. Now, case 2. When reserve or profit or loss account, is not to be closed. It is not to be closed. Okay. So now we don't have to close our reserves or accumulated profit or loss that is given in the picture. So first is calculate net balance of reserve, accumulated profit and loss. Means if there is two or more profit or loss balance given in the quotient, then we have to calculate net balance for that. Means let's say if there is 10,000 of reserve given in quotient and there is 2,000 of miscellaneous expenditure given in the asset side of balance sheet. Okay. or you can say the profit and loss balance is given on the asset side, 2000. So what will be our net balance?
That was the first item.
What?
So what was the first item you said?
General reserve, 10,000.
I'm not sure what to do.
Yes.
I'm not sure what to do.
Okay. I'm saying that if there is a profit, general reserve is a profit. Yes.
Yes, sir.
Okay. So general reserve is 10,000 in our books, and there is a profit and loss account balance on the asset side of balance sheet of rupees 2,000. Then what will be our net balance? So what will be our net balance?
The 8,000.
8,000. Yes. If there is a profit given, if there is a loss given, both are given in the quotient, then you have to deduct loss from the profit so that you can get net balance. In the same manner, like when there are some assets given in the quotient and there are some liabilities given in the quotient, and if we have to calculate net assets, then what we do generally, we deduct our liabilities from assets to calculate net assets. Yes.
Yes, sir.
Yes. For calculation of net sale, what we have to do?
It's the total sales minus sales return.
Yes. In the same manner, all the net balance are calculated. So if there is just a opposite balance or negative balance given in the quotient, then you have to deduct that negative balance from positive balance to calculate net balance. Okay.
Okay, sir.
So if there is a profit of 10,000 and a loss of 2,000 given in the quotient, then the net balance is 8,000. Because profit and loss account balance, which is given on the asset side, is a loss. Yes, you understand this concept?
Yes, sir.
Yes. So 2,000 is loss. General reserve 10,000 means profit. So 10,000 minus 2,000, we get for the net balance of 8,000. So I have given you example for two items, but there can be more than 3 or 4 items. So in that case, you have to see that which one is profit, which one is loss, and then you will calculate net balance accordingly.
Okay, sir.
Okay. So the first step is calculate net balance of reserve, accumulated profit and loss. Now, after that, calculate gain or sacrifice of each partner, because in this case, we cannot distribute the profit or loss in their old ratio. Okay. So that's why we have to calculate gain or sacrifice of each partner, because the net balance will be distributed in their gaining sacrificing ratio.
Okay, sir.
Okay. Next is multiply net balance with gain or sacrifice of each partner, that I already told you, because net balance will be multiplied with sacrificing, gaining, or sacrifice or gain of each partner. After that, we will pass journaling. So let me give you example for this. Let's say we have 30,000 of net profit or net balance, you will say 30,000. Now, there is two partners A and B. Their profit sharing ratio was 3:2, And after that, there is three partners. C is admitted as new partner, and now the new profit sharing ratio is 3:2:1. Okay.
Okay, sir.
Okay. So first of all, if we distribute this profit in old ratio, because this is net balance, so there is no share of C in this balance. Yes.
Yes, sir.
Okay. So if 30,000 will be distributed in 3:2, then 18,000 and 12,000. Okay.
Yes, sir.
Now, if we don't distribute it right now, if we are not distributing, if we are not closing our reserve account right now, then we have to distribute it in future. Yes.
Yes, sir.
And in future, it will be distributed in which ratio?
Gain or sacrificing ratio.
In future, it will be distributed in 3:2:1 new ratio.
Oh, yes, sir.
Because right now, if you distribute it between partners, then it will be distributed in old ratio, that is 3:2. But after admission of C, let's say 5 years has gone, and now you want to distribute it. So the new profit, and along with this 30,000, the new profit that you earn after admission and this 30,000 will be clubbed together. You will not know that how much profit is new and how much profit is old. Yes.
Yes, sir.
So you will distribute it in 3:2:1 between all the partners. So A will get 15,000, B will get 10,000, and C will get 5,000. Yes. Okay.
Yes, sir.
Okay. Now, you just told me that we will use gaining sacrificing ratio. Gaining sacrificing ratio is used for adjustment purpose between capital account. Okay. Not for distribution purpose. Distribution of profit is always done in their old or new ratio, whatever the situation is. If we are distributing past profit, then it is old ratio. If we distribute future profit, then it will be new ratio. Okay.
Okay, sir.
So gaining and sacrifice is used only for adjustment purpose. Now, here you can see A is in loss of 3,000, B is in loss of 2,000, and A is in gain of 5,000. Yes.
Yes, sir.
Because if we have distributed it in 3:2, then A was getting 18,000, but in future he will get 15,000. B was getting 12,000, but in future he will get 10,000. C was not getting anything, but in future he will get 5,000. So loss for A and B, and profit for C. So A and B will ask this money in return from C. They will say that you don't have any right on this 30,000 because this is past profit. So if we don't distribute it right now, if you don't close the accounts right now, then you will get this amount in future as a profit, you can say. Yes.
Yes, sir.
So that's why you have to return this money to us right now. And C has to pay A and B 3,000 and 2,000, total 5,000. Okay.
Yes, sir.
Okay. Now, as per the concept of this second case, what we have to do, calculate net balance, which is already given, sacrifice and gain. If we calculate sacrifice or gain here, then sacrifice will be how much? 3:2. Let's say calculate the amount sacrifice A and B. A old ratio was 3/5, B old ratio was 2/5. A new ratio is 3/6, B old new ratio is 2/6. So 30, 18 minus 15, 3/30. And here 30, 12 minus 10, 2/30. So you can see the ratio is 3:2, but if we say sacrifice, then it is 3/30 and 2/30. Now, the net balance is 30,000. So the distribution or adjustment will be A 30,000 into 3/30, and for B it is 30,000 into 2/30, and C is gaining partner because his old ratio is 0 and now his new ratio is 1/6. So his new ratio is his gain 1/6. 5,000. B it will be 2,000, and C it will be 3,000. So A and B is sacrificing partner. That's why their capital account will be debited. Sacrificing, sorry, not sacrificing. A capital, B capital will be credited, and C capital will be debited. Okay.
Yes, sir.
C capital will be debited with 5,000, A capital 3,000, and B capital 2,000. Means A and B capital will increase by 3,000 and 2,000, and C capital will decrease by 5,000 because C will pay this 5,000 to A and B for compensation because they are in loss due to not distributing this amount in their old ratio. Yes.
Yes, sir.
So result is same in both the situation: 3,000, 2,000, 5,000, and 3,000, 2,000, and 5,000. Journal entry you can see. Yes.
Yes, sir.
So you got this concept.
Yes, sir.
So this is our journal entry. Gaining partner's capital account debit to sacrificing. Gaining partner was C. That's why C capital account on the debit side, and sacrificing was A and B. So A and B capital account was on the credit side. Now you can write this.
So could you show the previous slide?
Yes. Done?
No, sir, one more. Yes, sir, ma'am.
Yes, ma'am. Am I audible to you, Ritika, right now?
Yes, sir.
Okay, you can see the screen also.
Yes, sir.
So this is our second case here. You are writing this. Have you completed?
So you said that case 2 is not in syllabus, so will they ask questions based on this or no?
Actually, in my book, there is a portion regarding this, and that's why I told you.
Okay, sir.
Okay, there are some questions related to second case in your book.
Sir, I don't know. We haven't gone to this chapter yet.
I'm not about audible.
No, sir, I don't know about that because we have not started this chapter in school yet.
Okay, so please see for these type of question. Okay,
Okay, sir.
and if there is some question given in your book, then please send me the PDF or image of that question. So we will discuss it in class.
Okay, sir.
Okay. Now, can you see the question? I'm sharing it with you right now. Are you able to see the question?
Sir.
No?
Now I can see, sir.
So the question is X and Y share profit in the ratio 5:3, and their balance sheet as at 31st March 2016 was given. And it is, the balance sheet is given A, B, share profit and losses in the, yes. They admit Jed into partnership with 1/8 share in profit on this date. Jed brings rupees 20,000 as his capital and 12,000 for goodwill in cash. Jed acquires his share entirely from X. Following revaluation are also made. Employee Provident Fund is to be increased by rupees 5,000. All debtors are good. Therefore, no provision is required on debtors. The stock includes 3,000 for obsolete items. Creditors are to be paid 1,000. Fixed assets are to be revalued at 70,000 and prepare journal entries, necessary accounts, and new balance sheet. Also calculate the profit sharing ratio. I'm showing you the question to understand the concept of reserves. Okay, we'll discuss the whole question, we'll solve the whole question, but the important part is only reserve and if there is any accumulated profit or loss given in the question. Okay.
Okay, sir.
So can you tell me if there is any reserve or accumulated profit or loss given in question? Is there?
Yes, yes, sir, there are reserves here.
Which one? Amount of which?
The workman compensation reserve 5,800
And
employees provident fund 10,000.
Employees Provident Fund is not reserve or accumulated profit loss. It is a liability.
Sir.
Anything else?
The profit and loss account.
Yes, on the asset side.
Yes, sir. It's
How
a
much?
loss. 2,400.
2,400. Okay. Now, these two are our reserve and profit and loss balance. If question don't ask us to distribute the profit or not to distribute it, then we will follow the case one. Okay.
Okay, sir.
And if it is said in the question that we don't have to close the accounts and we have to adjust these accumulated profit or reserves through capital account, then we will follow the case number two.
Okay, sir.
So can you tell me, is there anything given for case one or case two to be followed?
Sir, I don't get it.
I'm saying that is there any information given in question which say that we have to follow case one or case two? You understand my question?
Yes, sir. So there is no information given.
There is no information. So which case we will follow?
The case one.
Case one. Okay. Now in this question, we have to prepare revaluation account. Okay.
Yes, sir.
And we have understood the concept of revaluation in our previous class, and you also told me that there is no doubt in this concept.
Yes, sir.
So can you prepare the revaluation account of this question?
Yes, sir.
So please prepare revaluation account. I will prepare all other parts.
Okay, sir.
Hello, Ritika. Hello, Ritika. Am I audible to you? You were saying something if your voice is not audible. No, Ritika, you are not audible. Uh, should we continue like this? Okay, microphone and speaker not working. Uh, you should close the Zoom app first, then again rejoin at this link. Try this, and if it is not fine, then we will continue to conduct our next class. Because there is one question we have to discuss for this topic. That's why. Okay, I'm also not audible. Right. Hello, Ritika. Am I audible to you now? I don't think the problem is solved. Okay.
Sir, am I audible now?
Yes, yes.
I think there's some problem with my earphones.
Okay. Am I audible to you?
Yes, sir.
Okay. Actually, there is one question we have to discuss for this topic. That's why. Okay. So have you prepared your revaluation account?
So almost just
Okay, please complete this. And after that, we'll discuss the balance part.
okay. So 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 you muted yourself.
Yes, tell me.
So in the question, it says stock includes 3,000 for obsolete items. What does that mean, sir?
Obsolete items. Obsolete items means which cannot be sold or it is useless, you can say.
So will that come in the revaluation account?
Yes, because if there is some stock and there is obsolete items, then it means uh, that cannot be sold. It means zero value for those stocks.
Okay, sir.
So you can say stock is reduced by that amount.
Okay, sir. That's
So What is your answer?
So should I say all the items and their device value?
No, just tell me the profit or loss on revaluation.
Okay, sir. So I got loss on revaluation account. By partners capital account, total I got 19,000.
19,000.
Yes, sir.
Okay. Actually, there is, when I have prepared this, I've got 18,400. Okay. So first item is employee provident fund is to be increased by 5,000. Employee provident fund is liability, and if it is increased, it is loss for us. So 5,000 will be on the credit side. Yes.
Yes, sir.
Okay. Or debit side.
So credit side. Oh wait, no,
Okay.
debit. Wait, no, sir, debit. I wrote it on the debit side. Yes, sir.
Okay. So employee provident fund is to be written on debit side 5,000. All debtors are good. Therefore, no provision is required on debtors. There is a provision of 600, which is already made on debtors. Yes.
Yes, sir.
And now it is not required. Means we don't have to make a provision for loss. So it is a profit for us.
Okay, sir.
It will be
So,
written on the credit side.
I missed that.
Okay. Okay, so you will get 18,400 in revaluation. After that, I'm sharing you my screen now. Yes, 18,400 will be distributed between partners in their old profit sharing ratio. Yes.
Yes, sir.
That is 5:3. So we will get 11,500 for, it is loss. So it will be written on the debit side. Actually, in format preparation, I have written it on the debit side, you will see. But at the time, it is written on the credit side in the beginning because I don't know if there is loss or profit. So now it is loss. So we have to write it on the debit side of partners capital. It is said in the question that we have to prepare journal entry, but I think revaluation journal entry you know already. So there is no concept logic behind that that we prepare journal entry. I will show you how the adjustment will be shown in partners capital and balance sheet. Okay. Now the opening balance is given 70,000, 31,000 in the balance sheet. Yes, you can see. Okay. And they admit Jed into partnership with 1/8 share in profit on this date. Jed brings 20,000 as his capital and 12,000 for goodwill in cash. So I have written cash of Jed as he brings cash for capital. So 20,000. Okay.
Okay, sir.
Okay. Now the second thing is he also brought premium for goodwill 12,000, which will be distributed between X and Y. But can you tell me how we will distribute this 12,000?
So in their gaining and sacrificing ratio.
Gaining and sacrificing ratio. Do you know how much gaining and sacrificing ratio?
So I don't calculate.
Okay, so you should read this next line.
So should I read it loud?
Yes.
They admit Z into partnership with 1/8 share in profits on this date.
Next.
Z brings rupees 20,000 as a capital and 12,000 for goodwill in cash. Z acquires his share entirely from X.
Yes. Z acquires his share entirely from X. It means only X is sacrificing part.
Yes, sir.
So the whole goodwill amount will go to X only, 12,000. Okay.
Yes, sir.
After that, these items A, B, C, D, and E are revaluation item, which we have already written here. Yes.
Yes, sir.
But we have to adjust this in balance sheet also. So sundry debtors, there is no provision required on sundry debtors, so 20,000 will be written here. There is some change in stock. His stock value is 25,000, but there is 3,000 for obsolete items. So 25,000 minus 3,000, it will be 23,000. Okay.
So 22,000.
Okay. Yes. Sorry. 22,000. Yes. Okay.
Yes, sir.
Land and building. So there is no adjustment required for land and building. So we will show our land and building, that is 5,000 on its book value. Okay.
Yes, sir.
And fixed assets are to be revalued at 70,000. So 70,000. Done for asset side. This is not recorded. This is not recorded. Only stock, land and building, fixed assets, and sundry debtors are done. Here, creditors and employee provident funds. There is no information for creditors. So 15,000 will be written as it is. And there is one information about employee provident fund. It is to be increased by 5,000. So 15,000 here. 10,000 plus 5,000.
Creditors, they've given information.
They have given information.
Yes, sir. Creditors have to be paid.
Yes, it is 1,000 more. Okay, so it will be 16,000. Okay.
Yes, sir.
So our revaluation is done. There is no other. Provident fund is done. All debtors, stock, creditors. But there is one more item that we have to write in balance sheet. Can you tell me which is that item?
So workman compensation.
Actually, it will be distributed between partners. Workman compensation reserve and profit and loss account. It will be written here. You can see by workman compensation reserve, we have to distribute 5,800 here, 5 into 3, and profit and loss into 5. So
Yes,
profit and loss is, yes, 2,400, 1,500, and 900. And here for 5,800, it will be 3,625. 3,625. For 3, it will be 2,175. Okay.
Okay, sir.
So all items of balance sheet is already written here. So what is left now? Creditors we have written, employee provident fund we have written, workman compensation reserve is already distributed, capital account balance will be written, account, sundry debtors is done, stock, land and building, fixed assets, and profit and loss is already written. So what is left now? This is implied information. Okay, let's prepare the capital account first. After that, you should keep guessing. And if you understand this, then we will write it in our balance sheet. Okay, so capital account balance, we have to calculate 82,000, 85,625. Okay, and here it is 33,175, and it is 20,000. It is 85,625. It is 33,175, and it is 20,000. There is no other item left in the question. So to balance CD, for jet, it is 20,000. Okay. For Y, it is 33,175 minus 900 minus 6,000. So it is 25,000, 25,375. Okay, and for X, it is 85,625 minus 1,500 minus 11,500. It is 72,625. Okay. Now our capital account is also done. We have calculated the balance. Now, can you tell me what is balance left?
So is it cash?
Yes, very good. Cash. How much it is?
So should we add the goodwill with the cash or only the cash?
What are the transaction with cash or in form of cash?
So this capital,
Capital and
goodwill.
goodwill. Is there anything other than these two?
So
They admit Jet into partnership, and Jet brings 20,000 as capital and 12,000 for goodwill. There is nothing about cash other than these two items. Only these two items are written in our balance sheet. 32,000. Okay.
so
Very good. You understood the implied part, hidden part. It is 1,49,000. Tell me. And solution.
sorry what?
You should understand the code and solution.
So did I understand the solution?
The answer. Yes.
Yes, sir, I understood. Your audible, sir, but your voice is breaking a bit.
Okay. Now it is showing your Yes, Ritika, am I audible now?
Yes, sir.
Okay. So you understood the solution?
Yes, sir, I did.
Okay. Is there any doubt you have in this question, or should I explain one more time overall the concept?
No, sir, I understood it.
Okay. So you want to copy this?
Sir, I'll take screenshot.
Okay. Done. Good. Okay. There is one more question in this. Question number 55. I will share it with you, and please try to solve some of the question from the book also. Okay. Now we'll discuss the next concept, or actually, no, not next concept. We will solve a question according to the second case of general reserve and accumulated profit or loss. Okay.
Okay, sir.
Okay. So in this question, I'm not taking any other question. In the first question that we have discussed, this workman compensation reserve 5,800 and profit and loss account 2,400. Yes.
Yes, sir.
You understood the part of case two. Yes.
Yes, sir.
Okay. Now, can you tell me how we will adjust these two items if we don't have to close the accounts? What is the process? Just you have to tell me the process. What will we do?
So first we'll have to calculate the net balance.
And how much it will be?
So it'll be 3,400.
3,400. Okay. And after that,
And the second step, we have to calculate the gain or sacrifice of the partner.
okay. And actually, the gain sacrifice is not calculated in this portion because the JED acquired his share entirely from X. So only sacrificing partner is X. Okay.
Yes, sir.
Okay. After that,
So next we have to multiply the net balance with the gain or sacrifice, and then we have to pass the journal entries.
okay. So our net balance will be 3,400 multiplied by 1/8. So it is 425. So the journal entry will be X capital account debit to Z capital account. Yes.
So it'll be Z's capital account to X capital.
Yes, it will be Z capital account debit to X capital because gaining partner is Z and sacrificing is X. So Z capital account 425 and to X capital 4. Okay. So this is our second concept. After this, there is a concept of capital adjustment, or you can say adjustment of capital. Okay. So what do you understand by this topic name, adjustment of capital? Why this adjustment is required?
So because the partners are putting in additional capital and to record that.
Partners are putting additional capital? No, actually, no. The only partner who is bringing the capital is new partner. So he is required to bring some capital. Yes or no?
Yes, sir.
So other partners is not putting his capital. You have seen all the portion. In all these portions, there is only new partner bringing cash for their capital and goodwill. So all the partners are not putting the capital.
Yes, sir.
Okay. So, okay, let me explain. Actually, whenever there is a change in profit sharing ratio, whenever there is change in profit sharing ratio, so all the partners generally think that we should adjust our capital also if they agree. Okay, if they are not uh, agree on these terms, then the adjustment of capital will not be done. So if all the partners think that they should adjust their capital according to their profit sharing ratio, then this is required. Okay, because a new partner is coming into business, and at the time of admission he can demand that I am putting this much amount in this business and I'm getting this share, any specified share. So let's say there is three partners, three existing partner, and their profit sharing ratio is 5:3:2. Now there is a new partner D who is getting 1/5 the share. Okay.
Yes, sir.
Okay. So he's getting 1/5 the share in the business, and he is paying 2 lakh as capital. So he can say this, that I am putting 2 lakh as capital in the business for 1/5 the share only. Okay. So you should put the same amount accordingly, not the same amount, the proportionate amount. Okay. So how much you are getting in share of profit, and then you have to put this capital accordingly as per your profit sharing ratio. Okay. So he can demand this. And as per his requirement, the total capital of firm should be 10 lakh, because he is putting 2 lakh for 1/5 share. Means you can say like this, in total 5 share he is getting 1. Okay. So for this 1 share he is paying 2 lakh. So for total 5 share there should be 10 lakh. Yes or no?
Yes, sir.
So total capital for A, B, C, and D combined, also D. So A, B, C, and D combined should be 10 lakh. And in this 10 lakh, 2 lakh is capital of D. So the balance 8 lakh should be contributed by A, B, and C. Yes or no?
Yes, sir.
Okay. So if D demand this, A, B, and C have two options. One, that they deny this, means we will not contribute the proportionate capital. You can go. Leave the firm. We are not admitting you. You are too demanding. Yes, they can say that. Yes or no?
Sir, could you repeat what you said?
I am saying there is two options for A, B, and C if D demand this. The first option is that we are not contributing the proportionate capital. We are not bringing any more amount into the business. You can leave. We will not admit you as a partner because you are too demanding. Yes.
Sir, I don't think they can say that.
Why?
Yes,
Because his uh, request is reasonable.
Yes, it is
Then
reasonable, but the firm is A, B, and C are partners. They are existing partner. So if they decide they will not admit D,
it is possible.
yes, it's possible because it is A, B, and C form.
Yes,
So
sir.
D has no right. But yes, if A, B, and C agree on D terms, then they will adjust the capital.
Yes, sir.
So there is two options. One, that they will say to D that you can leave, and the second option that they adjust their capital. If A, B, and C is in requirement, you can say they desire to admit D. Okay, so in that case, they have to adjust their capital. But if nothing is like this, then they can tell D to go. And if the firm is profitable, then other partner will come.
Yes, sir.
Yes. In the same manner, let's say when you are, you can say, a person which have taken a property on rent. Okay, you have you are using a residential property on rent. Okay, you are living in that property. Now, you are using that property, and someone needy comes to you and tell you to that I want to share this room with you. Okay, and they will contribute the equal amount as rent. Okay, so if they ask you to adjust your things like bed, adjust your the almirah or anything else. Okay, if they tell you to adjust these things so that they can adjust their things, and they are also saying that you had to uh, take or use only half part of the property or the room. Yes,
Yes, sir.
in that case, you can easily say to that person that no, I'm not doing this. You can leave because he is needy or he or she is needy. Yes,
Yes, sir.
but if you need a new roommate because you feel bored or you need to contribute the amount, okay, the rent is too high. So in that case, you will follow the things that he said to you. Okay,
Yes, sir.
you will tell her that yes, I will adjust my things and you can use the room. So these are the situation where uh, condition change, and as per the condition you give answer to other person. So in the same manner, if partnership is in need, then they will admit D according to his demand, and they will follow their direction. And if A, B, and C does not require any new partner and D is needy, then they will not follow their demand, and they will tell D that you can leave. Yes.
Yes, sir.
So we are talking about when they all agree on these terms, then we have to adjust our capital. And how we will adjust our capital. So you understand why it is required adjustment of capital.
Yes, sir.
Yes. You also told me that the demand of D is reasonable. Yes, because he is bringing 2 lakh for 1/5. So his demand is reasonable, but it is up to A, B, and C that they accept or not. But if they accept, then they have to adjust their capital according to D ratio or the new profit sharing ratio. Yes.
Yes, sir.
Now, if they need to adjust their capital, then this 8 lakh will be adjusted, or it will be brought by the existing partner in their new ratio, not old ratio. You should remember this.
Okay, sir.
because now A, B, and C and D also, whatever their new share will be, they will contribute the capital according to their new share, because old profit share is not, we don't have to take consideration of old profit share, because it will not exist after the admission of D. Yes.
Yes, sir.
Okay. So, uh, what will be the new profit sharing ratio? So 1 minus 1 by 5, 4 by 5, 5 by 10, 4 by 5, 3 by 10, and 4 by 5 into 2 by 10. So 20 by 50, 12 by 50, 8 by 50, and D share is 1 by 5. So into 10 by 10, it will be 10 by 50. So 20, 12, 8, and 10. Or you can say 10, 6, 4, and 5. Yes.
Yes, sir.
So now this 10 lakh, the total capital should be 10 lakh. It will be 10 by 25, 10 lakh. Okay. 10 lakh into 6 by 25, 10 lakh into 4 by 25, and 10 lakh into 5 by 25. Actually, we don't need to calculate the share because it is already given, and we are calculating every other partner share according to D. So we don't have to calculate, but we are doing this. So it will be 4 lakh for A, 2,40,000 for B, 1,60,000 for C, and 2 lakh for D. So total is 10 lakh. Now, whatever their capital is, actual capital is, these are proportionate capital. Okay. So whatever their actual capital or adjusted capital given in the quotient, we have to compare these proportionate capital with their adjusted capital. Okay.
Yes, sir.
Okay. So whatever surplus or deficiency there is, we have to uh, bring or withdraw cash according to surplus or deficiency. Yes. Is this clear?
Sir, could you repeat? You were stuck for a bit.
I'm saying that if there is any surplus deficiency, it will be brought by new partner or withdrawn by, sorry, brought by old partner and or withdrawn by old partner as per their surplus or deficit.
Okay, sir.
Okay. Can you tell me the journal entry if, let's say, the capital of A, actual capital of A is 3 lakh, then yes, Ritika.
So how should we first journal entry for this?
First, you have to compare these two up. Okay. After that, you will get the surplus or deficiency. So first of all, tell me, is there any surplus or deficiency?
There is deficiency when the actual is less than the
Actual,
proportionate.
okay, is this is deficiency? Yes.
Yes, sir.
How much?
So 1 lakh.
1 lakh. So a deficiency should be brought or withdrawn.
So brought.
Brought by brought by A.
Okay. Yes, sir.
Yes. So if A will bring capital, additional capital, then what will be the journal?
So cash account debit to capital account
To A capital.
to A's capital account. 1 lakh.
Yes, it is very easy.
Okay, sir.
Okay. And if there is any surplus, then let's say surplus in B capital.
So then B's capital account debit to cash account.
Very good. So these are the journal entry that we pass for adjustment of capital. Okay. Now, actually, I will write these in theory form also, but I'm just explaining the things so that you can solve the question for these topicals. Okay. So now we have understood the concept where we have to adjust the capital of existing partner as per the profit share and capital of new partner. Okay.
Yes, sir.
Okay. Now there is one more concept related to adjustment of capital, which is we have to calculate the new partner's capital as per the actual adjusted capital of existing partner. So we have to calculate the capital of new partner.
Okay, sir.
Okay. Now in these two concept of adjustment of capital, there is a concept of adjusted capital. Can you tell me what does it mean of adjusted capital?
So this is the difference between the actual capital and the proportionate capital.
No, no, actual capital is called adjusted. So what is adjusted capital? Or you can say what is actual adjusted capital?
So it is the capital after making uh, changes due to the profit sharing ratio.
Capital according to the profit share ratio.
So I'm saying, is it the capital which is the change due to the new profit sharing ratio based on that?
It is proportionate capital.
Oh, yes.
This capital we have calculated here.
Yes, yes.
1 minute. Wait, 1 minute. Okay, so when we calculate the capital of all partners according to new profit sharing ratio, it is called proportionate capital, which is already calculated here in front of you. Okay, Let me explain. Adjusted capital means actual capital of partners after adjusting all the required items. Like in capital, we have to adjust revaluation profit loss. We have to adjust general reserve accumulated profit or loss. We have to adjust goodwill, existing or valued goodwill. So these items are adjusted in capital account before doing this adjustment of capital. Okay.
Okay, sir.
Okay. So whenever there is adjustment of capital, before that, we have to prepare revaluation account and distribute the profit loss. We have to adjust the reserve accumulated profit or loss, and then we have to transfer into capital account. We have to adjust the goodwill, the valued goodwill or existing goodwill, and then we have to write it in capital account. And after adding or deducting all these items, we will get our final actual adjusted capital of part. Okay.
Yes, sir.
And on the basis of this actual adjusted capital, we will compare this capital with proportionate capital, not simple capital. We have to compare. If there is no adjustment in the quotient, then the balance given in the quotient is called actual adjusted capital.
Okay, sir.
Okay. So if we talk about, let's say in this quotient, if they ask you to adjust capital also, then this amount, we have calculated this amount before the adjustment. So these can be called as adjusted capital.
Okay, sir.
Okay. So this is our adjustment of capital on the basis of actually the new partners profit sharing ratio and capital. And there is second concept which we have to understand now. Okay, so adjusted capital, if you have understood, let's say we have calculated this 72,625 for A and 25,375 for B. So the total capital of these two are 98,000. Okay. Total is 98,000. Okay.
Yes, sir.
Okay. Now, if they tell you to calculate the new partner's capital on the basis of old partner's adjusted capital and their profit sharing ratio, then what will happen? 98,000 is for existing partner. So we have to calculate the combined profit share of existing partner, combined new profit share. Okay. So combined new profit share will be how much share was for Z. Z was getting how much share? 1/8. Yes.
Yes, sir.
So combined profit share after deducting Z share will be 1 minus 1/8. So it will be 7/8. Okay.
Yes, sir.
Now 98,000 is for 7/8. So total capital should. So we have to multiply it with reciprocal of here 8/7. Okay.
Yes, sir.
So it will be 1,12,000. This should be total capital. Total capital. Now, can you tell me the capital of new partner? Jed?
Yes, sir.
Okay, how
So it'll
much?
be 1/8 of 1,12,000, right?
Yes, we can calculate it by two methods. First is 1,12,000 into 1 by 8. You will get, I think, 14,000. Okay.
Yes, sir.
And there will be second method, 1,12,000 minus combined capital of old partners. That is 98,000. So you will get 14,000. Is this clear?
Yes, sir.
Now you can solve these type of questions. So please try these questions. Actually, I will prepare question for this topic also in our next class. After that, I will give you homework for this. But you should try this at home in your book. Okay.
Okay, sir.
Okay. So do you have any doubt? Any question you have?
No, sir.
Everything is clear. Actually, this adjustment of capital is not fully clear. I